can get from the provider community. The format is very extensive. It's involved, has many hundreds of questions actually that we send to the vendors. I like to kind of consider it like a funnel. Lots and lots and lots of data comes through, and at the very end, you know, we make a decision with less and less information. Every time that we've presented, we allow the vendors to review our work and come back with any clarification that they need in the way that we've presented, and we allow them the opportunity to make any adjustments to something that we may have that they feel, you know, is not incorrect or should be presented maybe a little bit differently. From last meeting to today, we have a couple of things that we'll insert. I'm sure it'll come out in Q&A, but we can make sure that we go through that list. We do want to remember that every vendor, you know, gave us performance guarantees as it relates to the networks and as it relates to administration. We did have a $1 million credit to your administration fees for the first year from United Healthcare. However, that money was able to be recouped if you terminated from them early. They've retracted that, and there wouldn't have to be a payback. Blue Cross came back and asked, you know, about the repricing of the claims. However, when they presented their information, it was new information. It was a different time period of claims, and it did not, it included the retirees where previously the data file did not include retirees. United wanted us to stress the importance of technology and the fact that they were willing to put an employee on staff. So we can take that into consideration as well. Meritain came back and gave us a new file in regards to providers that were not included in the network. However, when we went through peer review with them, they were incorrect in some of the data that they gave to us, so they were willing to go back to the disruption that we've previously submitted. Saying all that, we're really prepared for Q&A unless you guys have a question.
I do not. Committee? All right. So what I'd like to ask you to do, I know that Mr. Edmond cannot be here today, and it looks like Bob is sitting there. So I'd like to ask you two ladies to come sit up here, only because we don't want to keep going back and forth to answer questions. We're going to have questions from here, and we're going to put you guys in the hot spot to answer them so we don't have to keep going back and forth. Sorry I didn't tell you that before, but there you go.
Okay.
Yeah.
Bring the laptop. It's airplane. It's not going to do that. It's one of the power. You have a plug right here. So you don't need this for. That way, if you need it, you'll have it.
If the first two folks who have questions would like to come forward, now's a great time. Can get situated. Make sure the microphones are on, and please speak clearly into the microphone so we can hear your questions. And just give us 1 second to finish getting set up. Okay, sir, you're up first. What we'd like you to do is tell us your name and move forward with your question.
Okay, my name's Don Hargrave. I'm here for my wife. I'm sorry? Okay, I'm Don Hargrave. Nope, still? I'm Don Hargrave. I'm here for my wife. My question is, do you know the track record of the three companies that are participating as far as the way they paid out the claims to the patients, and in a timely manner, of course. We're used to Blue Cross, but the other two we're not. So we're interested in seeing the track record of payout. Thank you.
Okay. So as it relates to the track record, just to remind everyone that Lafayette Parish School Board is a self-funded plan. So it is your plan document, and the school board gets to make the decision on what is covered in that plan document and how those claims should be paid. So things like, prior authorizations or steps that an employee needs to go through, those are decisions that are made by the school board and not your TPA. Your TPA is just administering your plan document, but it is the school board's plan document. We did receive data on the accuracy of those claims in our RFP process. I don't have that data with me today, but we do address how accurate the claims are, how many claims are adjudicated, auto-adjudicated. Majority are auto-adjudicated in their claim system, but we did request that information, and it is part of our evaluation process. Mel, do you want to add anything?
In addition to that, they do have performance guarantees. So the answer is yes, we've reviewed that data or that information extensively.
Can you elaborate on the fact that there are laws in place regarding claims payment in a timely manner or a certain time frame?
Yes, even to your point, Jeremy, although you're self-funded, you still have to follow some federal regulation, which includes when the TPA, the third-party administrator, should process those claims in a timely manner. That language is the same for any vendor that would be used. So in other words, it will be the same as it was with Blue Cross if you do make a change.
Let me just add that again. I want to reiterate to everyone, Lafayette Parish is the insurance company. Lafayette Parish is the insurance company. We have to follow laws, regardless of who you with. The TPA is nothing but the person that is handling those particular things for us and taking our money and paying it out. So regardless of who we are with, we have to follow the laws, and it's still going to be our same money.
Okay, yes, ma'am.
My name is Gail Harmon. My name is Gail Harmon. I worked in the Lafayette Parish system during the 60s, 70s, and 80s. So I am one of those whose retirement check is very minimal. I worked in insurance after I retired from teaching for 16 and a half years in accounting. And I worked for one of the largest and oldest insurance agencies in the United States. We handled a lot of self-insured accounts, and I have personal contact with Aetna, and we were with Aetna for a year. They had to return us to Blue Cross because of the way the claims were being paid. So I do not like Aetna. I prefer that you go with United Healthcare, but at any rate, being that I worked in accounting with insurance, I have one question. What computer-generated reports did you use to substantiate the deficit numbers?
About the projection.
No, ma'am.
Okay, please clarify.
The deficit numbers from like the year 2024. There should be computer-generated accounts showing you what the actual deficit is for the insurance.
I believe that's a LPSS question.
Question.
Trish,
That's an LPSS question.
That's the
so-
budget, yes.
I mean, we reconcile on a regular basis with accounting on at least a monthly basis. Is that what you're referring to, ma'am?
No, ma'am. I'm referring to lost runs.
Fund 85 has numerous accounts to which is reconciled on a regular basis. Lost runs meaning
Lo-
claims that are processed through Blue Cross.
You can run a yearly report on lost runs showing actual deficit numbers in each area.
So we work through that process with the Fund 85 accountant, if that's what you're asking. Yes. We pull
So-
reporting, we reconcile monthly, and then we coordinate with Gallagher and we take our totals and we reconcile directly with Gallagher.
So you do
So-
have actual lost run reports?
We have reporting. It may not be the same reporting that you're referring to while you're noting it, but we have reporting that we reconcile and then we coordinate it and reconcile directly with Gallagher. We're completing the same process, just perhaps a different way from what you're referring to.
Okay, because when we had self-insured funds, we ran lost runs to prove what their deficits were.
Keep in mind, those numbers are fluid on a regular basis. We do project out based on how the current claims and billing are coming through. Like, if I'll give an example. Last week, the superintendent mentioned that we had a $1.2 million claim on one individual. So then that Fund 85 medical claims budget was essentially blown for that given week. On a given week, we roughly have about over 800,000 in claims through our current TPA Blue Cross. So that number's super fluid on a regular basis based on claims and billing that come through. And then we reconcile monthly based on where we are at that given point in time. Does that help?
I'd like to add, Trish, that you're getting claims runs from Blue. So as they're wanting to pay those providers, LPSS is notified of how much money that needs to be in those accounts to be able to pay those providers. And so they are, to her point, reconciling that on a regular basis. So the claims runs are coming from Blue to pay those providers, and they are reconciling those on a regular basis. As would the same process be if they were to choose to go to Meritain and/or United.
I think the point that you're trying to make is you're questioning the deficit that we continue saying in reference to.
Correct.
All I will say to you is, as Trista stated, is that every day we are holding our breath because we are getting claims that come in, and we are taking in money from the employees and retirees. But remember, 70% of that is coming from the board's fund. So all I can say to you is that when we say that we needed $6 million to be put in addition to from what you guys put in, would the board already put another $6 million put into that fund? We put it in there. But here's what the projections are. These individuals here said that you're going to need an extra 5 or 6 based upon the things that we're seeing. So all I can say to you is that we're not talking about $100. We're talking millions of dollars that we have to deal with these different things coming in. And I understand you're run loss, but Trish continues to say that this is very fluid. It's coming in and out. I keep going back to is we are the insurance company.
I understand that.
So I want to interject because it would be a lot more helpful. This workshop is really about asking questions about a potential health insurance and TPA changes. And I understand you're concerned about the finances. I'll tell you that there's no, we've heard so many times, that we're at the end of the rainbow and we got this little pot of money. What you're seeing is data from claims that have processed that Blue Cross, because they are our third-party administrator, have processed, that they're sending data over saying, these claims are in the hopper, you need to pay them, and then we send the money. It's real-time money. Our budget is not real-time money, but our budget is based on what we know is happening and what the trend is. But the reporting that we get from the deficits that have been reported is real, accurate claims paid reports. So thank you for the question. I'm hopeful that we can spend more time on, we'll continue to answer these questions the best way we can, but probably in a different setting if it's okay. I want to spend, if we can, more time on what I think most people are here for, and it's the information within the plan. Thank you, Ms. Holman.
Well, I'm for United Healthcare. There's several major
Thank
entities
you,
in
Ms. Holman.
Lafayette that are with them, and they love it.
Thank you. Yes, sir.
My name's Dave Hamilton. I'm a retired Lafayette Parish teacher. I am probably the cause for the deficit that you're talking about. I'm the poster child for that deficit. Since the year 2004, I've had 32 heart surgeries. I'm a cancer survivor. I have type 2 diabetes, and I have been diagnosed with myasthenia gravis. If you don't know what that is, go home and look it up. But it's a very expensive condition to medicate and so on and to take care of. I'm sure that everybody in here is worried about pre-existing conditions. I am so afraid of insurance changing because I see 8 doctors every 90 days. I just want to know, will my pre-existing conditions, as I had them with Blue Cross Blue Shield, never had an issue? They paid everything. They have been totally a godsend to us, to my family. We would have probably gone broke trying to pay medical bills. But will the pre-existing conditions that we had be covered, and will they be covered close to the same that Blue Cross Blue Shield paid?
I'll take that one. I think we're going to hear us say this a lot today, and it's not to be redundant, but I think there is a huge disconnect. Your benefits are Blue Cross Blue Shield does not provide you health care benefits. They do not. Lafayette Parish School System provides you health care benefits, and as of today, there are no recommended changes to those health care benefits. In fact, that is one of the reasons we're looking at different third-party administrators to try to get a better, I don't want to use the word deal, that's so below what we're doing, to get a better process on how we can get high-quality health care for a reasonable amount of money. Blue Cross does not provide you health insurance. If you were through Blue Cross as an individual or through a fully insured plan, then you would be on their plan and subject to their terms. You are not. No one in this room is. None of the 10,000 lives on this plan has insurance with Blue Cross Blue Shield. So the short answer to your question is there are no plan changes to benefits at all whatsoever. Please clarify that for me. There are no changes, no recommended changes to the current plan.
That's correct.
So yes, you will still get the same level of care. And we'll allow more questions because I think it's going to give you more insight to how we get there. But just short answer, there is no change in benefit no matter what third-party administrator we use because they're not providing the benefit. Lafayette Parish School Board is providing the benefit.
Thank you for your time.
Yes, sir. We could take 2 at a time if you guys want to come up.
Hello. I'm representing my wife, Pearl Cornian. We do not live in Lafayette, but we do use Blue Cross Blue Shield. Now, my name's Michael Cornian. My question is this. I understand from what you say the payments for my care, my wife's care, come out of your collective pockets, the school system collective pockets. And the administrators basically go out and probably use their size to get you the best deal as far as the contract. Is that my understanding? As far as dealing with the payments?
That's what they would have you believe, yes, sir.
That's right, okay. So we have dealt with Blue Cross Blue Shield since, almost 40 years, okay, since we arrived in Lafayette. And we've dealt with another cousin of Blue Cross Blue Shield, Southwest Louisiana, called Anthem, which is a big monster up in the north. Pretty good. My question to you is this. Now, if you look at the other contenders, the 2 other contenders, do they have the size comparable to the Blue Cross family as far as going out and being able to get the best contract price with the providers. As far as dealing with you folks or anybody else that's involved in this.
I can help answer that. I mean, United Healthcare and Aetna, the two other TPAs that are on the table, they are national. They're national insurers, right? So, in fact, both of those companies could probably buy and sell Louisiana Blue 10 times over, right? So, for those of you that don't know, Blue Cross is a Louisiana domicile entity. So Louisiana Blue they're almost like franchises, right? So you have Anthems, you have Louisiana Blue, you have Blue Cross of Texas, you have Blue Cross of Florida. Those Blues plans, they operate independently of each other, but they're kind of part of a fraternity of Blues, right? Where they share in their networks, they share in some resources and things like that. But when we compare them to a United Healthcare or Aetna, United is a national insurance firm. So is Aetna. So from a scale size, those entities are actually larger, have more employees, have more, have different resources than Louisiana Blue. However, Louisiana Blue is a strong entity here in Louisiana and something that, we know is important to you. So I hope that answers your question. Mel, do you want to add anything else?
I think that answers the questions. I do want to move into maybe a little bit more of what we call point solutions, value-based network evaluations, et cetera. For a long, long time, insurance companies went to providers and they basically tried to get the best deal that they could to keep the premiums down.
Yeah.
But we've exhausted that.
Yeah, okay.
We've exhausted it. We're continuing to pay 11% more on prescriptions and 8% more on medical claims.
Yeah.
And employers and insurance companies, for that fact, are now looking at data, and it's suggesting that there may be better ways to care for patients, create better outcomes, and pay providers at an adequate amount of pay.
Yeah.
So what you have is insurance companies really moving a little bit away from let's negotiate the lowest amount that we can to have to pay these providers. They're looking at it now more from if there's 10 oncologists or there's 10 orthopedists, who is the best provider out of those 10? We're not there yet, but what I would say is that consultants are looking at these various entities in that way to provide healthcare to employees.
If I could get one follow-up question. You say that they're looking at seeing who provides the best. Mm-hmm. What are the metrics that they use to do that?
It's very complicated, but the metrics that's being used today and somewhat being copied is metrics that's being provided by CMS through Medicare and Medicaid payments.
Okay, yeah, CMS. Okay, great. Well, look, I know it's a very complicated problem, and I know one of our former presidents, when he signed into law for, I think it's Part D, as far as a drug plan, as far as the U.S. government picking that up, he made a comment that he said, we'll bankrupt the government. And I understand your problem as far as the money. Thank you very much for your help. Appreciate it.
Thank you, sir. Yes, ma'am.
My name is Anna Dean Crater. I was an educator in Lafayette Parish from the beginning of the 70s, 80s, 90s, and for the first decade of 2000. I've always been very pleased with the insurance we have carried, and I expect all of you to continue providing us with this wonderful benefit. It is a benefit that was promised to us when I first started teaching and before. We've passed a tax to make sure that we could help to pay for it. So we continue to ask you to continue to provide us with all that you can. And we know that you can because you're spending a lot of money right now. You're improving buildings much better than it ever was when I was teaching. I walked in the rain. I walked with rubber boots. We didn't have sidewalks for us to walk somewhere. And you're providing all of that with all the covers to go over them. And covers for also for the PE classes because Back then, when I was teaching, PE was outside in the rain or inside in the classroom. So I commit you. But you're also going to have extra expenses with our insurance, and it needs to be part of the budget. What I would like to know now is, though, is there a termination provision to cancel with either of these companies that we go to if we are not satisfied within a year?
There are some termination provisions as it relates to some of the credits that they're giving to the administrative fees that you pay on a monthly basis. I mentioned that United Healthcare was giving a credit to the administration fee, and they were going to claw that back if you terminated early. So there are some minor termination provisions in which each of these vendors, but we've taken that into consideration in regard to the savings.
I think the biggest problem we have is we would like to hear from the people directly. We're not getting complete answers to questions. Thank you.
Well, Ms. Crater, you don't have to leave if you don't want. I'm going to respond to that. I'm going to respectfully disagree with you. You're getting very complete answers. In fact, the market check that Gallagher went through included upwards of 400 questions that each one of these TPAs had to answer. And it's incumbent upon them. I'll tell you that throughout this process, we've heard feedback back from Gallagher whereby information and agreements have changed, have been verbal one way and in writing in another way. And we're not going with anything verbal. We're going with everything in writing. I understand the concern. I feel I understand the concern that you have, but what I'm hopeful of is that you will be happy with and respect the process that has taken place, because it was quite extensive. And let me tell you exactly what had happened. If we had, whether it were 3 or 5 or 2, it doesn't matter. If we had the TPAs who were bidding for this project in a meeting, in a room with a microphone, I think you know what would happen. I think you would ask a question, and they would make sure that you got an answer that you wanted to hear. And what we did was we stayed out of this process. Gallagher did this for months through a formal process with many questions and accurate data. So we're very confident in the outcome, and I'm hopeful that before long, no matter what the final decision is, that you'll be able to come around to being happy with the process as well.
Well, we certainly hope that you are going to provide the best insurance you can for us. And we also understand that the cost is going to go up every year anyway.
Well, I want to repeat, we're going to provide the same insurance you have today, no matter who the third-party administrator is. The same benefits you have today, you will have if the TPA changes.
Okay, and the other thing would be, since we're dealing with companies that are a little bit like on the lower or the franchise under United and under Aetna, are they capable of handling the system that we have, or will they have to go to United and Aetna to help out with anything?
I would say yes.
I don't understand the question.
I mean, we are the insurance company, and here's another thing I want to make sure that everybody understands. We have been with the Blues for 31 years. Mm-hmm. We have not even shopped the market as far as TPAs are concerned. We're now doing that. We're doing that after 31 years, and we're trying to see whether or not we can do better.
Yeah,
And
I think
what it
that's
comes
good.
to.
I agree with you.
But 31 years is just a little bit too much, is what I'm trying to say.
I agree with you, and we need to get the best, but we want to make sure that we have exactly what we have, or even better.
We are the insurance company.
All right, thank you.
I just want to, just to put some things in reference. I think traditionally when we think about insurance and you think, I'm with Blue Cross Blue Shield, traditionally you'd have to use Blue Cross Blue Shield's network. Or if you're with Aetna, you'd have to use Aetna's network. What we're trying to do here with either Aetna or United Healthcare is say, let's not just use their network, all right? That's what we haven't really talked about direct contracting a little bit, but that's where direct contracting comes into play. Let's say your provider doesn't take Aetna. They don't have to negotiate with Aetna. They can then come to us and say, I want to work with LPSS, whether or not it's, we talked about Canadian Ambulance Services or whomever. The doctor can come to us and we can work a contract with them. It's not like traditionally speaking where you're in a network or out of network. Like out of network is going to become a little bit more fuzzy because we can then work with those healthcare providers directly. So I want to put some clarification to that, like, because some people are saying if we move to United Healthcare or Aetna, my provider doesn't take that. Well, that's okay, right? They can then come to LPSS and say, we want to work with you guys, and we can work contracts with them directly, or potentially, right?
Thank you for bringing that up. I was going to wait until we got a question about that, but this is great because it gives us more than one time to talk about it. And also I believe it was Mr. Horton, to his point. Just because someone's not in the network today, absolutely does not mean they will not be in the network by the time January 1st rolls around. Because not only will providers be contacting us directly, they already have, ladies and gentlemen. That we've already got major players in this market contacting us to direct negotiate. But we, as a system, are going to be actively out there trying to find out which one of our insureds has a physician or a provider who's not in whatever network, if it's not Blue Cross. And then we're going to actively be reaching out to them to say, hey, we need you guys on board. You have belly buttons from Lafayette Parish School System that want to continue to get health care from you. So, great point. Yes, sir, you're up.
Very good. My major question concerns what happens after you go to the hospital or the doctor. Since LPSS gives the LPSS Blue Cross Insurance Management personnel directions, or does the Blue Cross personnel make final decisions as to recommendations made by our doctors, our individual doctors? We've been told over and over that our insurance, LPSS insurance, is our insurance, not Blue Cross. In an attempt to promote trust between the LPSB and the employees, when a decision as to our future insurance management provider is finalized, it would be reassuring to all of the employees that if LPSS was to go on record stating that if a patient's doctor recommends a procedure, that it would not be postponed, denied, nor if the belly button employee were in the hospital, they would not be rushed out of the hospital before the insured person's a doctor would recommend that return home.
Currently, your benefits are provided to you by means of what's called a very legal document. It's called a plan document. You could get a copy of that plan document. You have access to that plan document, and that plan document, upon request, you could get a copy of that document. That document is what every self-insured plan uses as the instrument in which to process and pay claims. So in other words, there's this document that was written many years ago, and it told Blue Cross how to ask for an authorization, when to ask for an authorization, what the deductible was, what the co-insurance was, what the definition of a pre-existing condition was, what the definition of coordination of benefits was. All of those provisions are in that document. LPSS wants to mimic that same plan document for 1/1/2026 if they go to a new administrator. So you can be assured that how those claims were processed in the past will continue to be processed on 1/1/2026, unless there's an amendment to that document. But this board, can make amendments to the current plan document they have with Blue Cross. What I think I also heard you say in the beginning of your question was, maybe I'm wrong. I'm trying to understand what the question was. But let's just say that something wasn't covered under your plan, and you appealed that claim. Your doctor appealed that claim on your behalf. The final decision that is made regarding the payment of that claim is LPSS. But 99% of those claims that are appealed those appeals are performed by Blue Cross on behalf of LPSS. And I think that
Okay,
I hopefully answers
I
your-
appreciate what you're saying. And for, I guess 50 years now that I've been under that insurance, I would agree with you that I've had no problems. However, the last year has not been the same. I've been hearing things from some of our former employees or those who are now working in the schools that there have been problems in the last year where postponements have been done and denials have been made with our LPSS insurance. I have not heard that with those of us who are on Medicare. So there's definitely been some differences. Maybe I misunderstood some of the things that were told to me, but I definitely heard it. And if I heard it, other people have heard it also.
Well, the one thing I can say is since Gallagher has been on board, I'm not aware of any plan document amendments. And so if there, and I'm not trying to disagree with you, I'm just trying to help. So what I guess I'm trying to say is that if there have been claims that have been paid differently, then that needs to be brought to the attention of Ms. Trish. Because again, Blue Cross pays this school district, let's just say there's another school district that's self-funded and Blue Cross is the administrator. Their benefits, forget the deductibles, forget the co-insurance. There's other provisions of those documents that help that Blue Cross know how to process your claims. But every plan is different.
So let me.
To my knowledge, there have been no amendments to your plan.
So that plan is what we create. And as of right now, the plan will continue unless the board changes any of that.
I understand what you're saying, and I appreciate what you're saying, and I wish that last year I hadn't heard that some people had been denied.
Well, those are particular things that I can assure you that Trish and her team are gonna troubleshoot and we're gonna, but nothing as far as the plan is concerned that we changed. So there shouldn't have been anything. I don't know specifically what you're referencing, but I can say to you, all of those things would be filtered through our insurance.
Well, Mr. Superintendent, this also kind of gives me the opportunity to say that TPAs make mistakes. So if Blue Cross is processing your claims in a different manner than that plan document, then what we sometimes do is we audit those plans. So we ask even for external auditors to take what they call samplings of claims to ensure the accuracy of claim payment. From time to time, it's important to audit those TPAs to ensure accuracy of those claims payments.
Yes, I understand what you're saying, and this is my last statement, and I'm out. I'm not concerned with the payment. I'm concerned with the person getting the treatment the doctor recommends in a timely fashion. Thank you.
One thing to add to that is that not every medical procedure is going to be covered under every medical plan. It's not carte blanche. So it's unfortunate, but there may be a situation where a $12,000 a month specific drug is not going to be covered under the plan. That would be a denial. No. We're good.
Well,
We're good. I'm telling you, that's not going to be that case. We are good because under a self-insured plan, as well as under a fully insured plan, you're not going to have a whatever the doctor ordered carte blanche plan. You're just not. Can you please speak to that? That's not the way it is.
Every plan document has exclusions. I mean, I'm just going to use a simple one that just came to my mind. The removal of a toenail is not necessarily covered under the plan. Cosmetic surgery is not covered under the plan. Botox for headaches may or may not be covered under the plan, depending upon the medical criteria. So there are always exclusions under the plan, which sometimes I believe, protect you because typically what we're following is American Medical guidelines criteria for what should and should not be covered under a plan.
The goal is, if you imagine, it's a book in the library, and we're just taking it out of that library and moving it to another library. That's the goal, is taking the plan as is, it's bound, and you're just moving it over. As far as the claims coming to us that have been denied, I think Ms. LaBeouf and I had a conversation the other day. We have encountered one or two, I haven't encountered any in the past 3 years, that have made it to our level of appeal. And we would just talk about the other day, I think it's been over 3 years since we've had any denial and work its way through that Blue Cross Blue Shield couldn't handle as our TPA to where it came all the way to us. So that helps settle the water. I wanted to share that.
Yeah, and I'll just add too, denied claims do happen. To Melody's point, the insurance companies are not perfect, and neither are the providers, right? So many times, a claim might get denied because the medical information has not been provided to the insurance company appropriately, or the insurance company misinterpreted the medical information. So those things do come up. They're not common, but they do happen, and may require someone to intervene and assist with that specific claim.
Daphne Vilmoret. I'm going to ask Kim if you would mind clarifying that UMR and the other one, Meritain. Sorry, I had maintain in the brain. And Meritain are not smaller companies or entities. They're not subsidies of either United or Aetna. They are strictly the TPAs, because there seems to be some confusion that all of a sudden we want to go with these smaller companies as opposed to Blue Cross, which is a big company. So would you please clarify that?
I understand. So UMR and Meritain are truly the TPAs that would be administering your claims. UMR is owned by United Healthcare. Meritain is owned by Aetna. Your TPA today is Louisiana Blue, and it is owned by Louisiana Blue. Is that helpful?
Mm-hmm. So to carry that a little further, if I'm understanding Medicare, CMS is the administrator of Medicare. Medicare does not pay the claims. CMS pays the claims. Is that true?
CMS is more of the governing body.
Okay.
There's different contracts as it relates to the payment of those Medicare claims.
Okay. I was just wondering if it was similar, but thank you. I appreciate that.
Burnell Lemoyne. I just have one question. We've had premium increase, especially for the retirees at 50%. And I would just like to know, what is the total amount that's collected in premiums per month? Total amount of premiums collected per month. Thank you.
Mr. Lemoyne, I don't have that information in front of me. They're actually using my laptop right now, but I can certainly get that information.
Very good. Thank you very much.
Matt, could you pull that up?
Ron LeBlanc. I have a question. We're looking at the Blue Cross giving us probably a 25% increase in premiums, whereas the other two companies would not give any increase whatsoever. How are these other two companies going to make up the difference of those $6 million? And I'd go back to what Mr. Duya would say, are some of these things that we're getting covered for now not going to be covered? There's a discrepancy in one is going with no increase, two are going with no increase, and one is going with a 25% increase.
I'm going to take the first stab at that. So a couple things. I know this sounds redundant, and my apologies, but I think it's important. The companies are not going with increases. If we retained Blue Cross as our third-party administrator, we would have to do two things. We would have to increase premiums by about up to 25%, and we would have to increase deductibles, copay, and go from 80-20 to 70-30. Now, here's how we got to that number. When Gallagher went out to the market and said, hey guys, these are our claims for the entire year last year, Lafayette Parish School System, this is every claim. They didn't give any personal identifiable information, so they didn't have our names on it, but they had every claim we made. I had a shoulder surgery. That claim was on there. Blue Cross didn't have to reprice that because Blue Cross is the one who paid those claims on our behalf through their network. So we already knew what the costs were last year. We already have that. The other companies took those exact claims, put it into their system, and said, if Lafayette Parish School System insurance were with our company last year, here's what the total amount of claims would have been. And in both cases, which is the reason why we're even here having this conversation, those two companies, the other ones came back much higher, so they're not even being considered. Those two companies came back with a lower paid out based on the negotiations that they currently have with the providers that we use and claims that would have been paid if they would have been our TPA. To reiterate, again, they are not going to be providing us with healthcare benefits. We establish those healthcare benefits. We tell them what those healthcare benefits are, and they pay claims on our behalf based on those benefits. And to go one step further to some of the other questions as well. Just like Blue Cross is an insurance company, it's also a third-party administrator, two separate entities. So is UMR and Meritain, in that Aetna will not be paying claims on our behalf. Meritain, which is a subsidiary, will be. And a little more clarity, Meritain doesn't pay claims for Aetna. Okay? Aetna has its own claims payment processing center for their internal fully insured plans. Meritain is a subsidiary, and their job is to do business with folks like us who are self-insured, who have our own plan documents. Aetna, Blue Cross, United Healthcare, Cigna, all the big companies have their own healthcare packages, and we have our own. So I don't know how else to clarify that, but I think that your concerns should be absolutely mitigated with those responses.
My major concern is that, okay, we want doctor number 1. We don't want doctor number 10. And we know some doctors give different services for, some of them are real outstanding, some of them are okay, and some of them we don't want to see. And we don't want to get caught in seeing the ones that we don't want to see.
Well, I'm glad you said that. I agree with you. I don't want to have to change doctors. This market, especially with Blue Cross in this area, because they have dominated the market for a while, has created what Melody alluded to earlier, an inflated healthcare cost in our area. There's no question about it. The doctors will tell you that, if they're being honest.
I have two grandsons that are doctors.
Good, then they would probably tell you that. And I'll say that, as unpopular as this is going to be to say, it is incumbent upon those providers to want to work with LPSS. They don't have to, they're not working with Aetna, the insurance company, Blue Cross, the insurance company, United Healthcare, the insurance company. They're not working with those guys. They would be working with us, Lafayette Parish School System. Claims paid through a third-party administrator. And it's incumbent upon those providers to want to work with us. Are they maybe going to have to take a lower payout? Here it is for the record. I hope so. That's the whole point of this process, is to get away from this convoluted, antiquated process by which, whether or not providers are getting overrides and kickbacks, we need those days to be over with. We need good health care at an affordable price, and that's what we're trying to accomplish. Same health care you're getting today. Thank you.
Could you pull up page 6 of the Gallagher report, if you don't mind? Mr. Hidalgo just said that if we went with Blue Cross, we would have up to a 25% increase and plan changes. But if you look at column 1, 2, 3, 4 requires what? It says either or. It says up to a 25% increase or major plan design changes.
Would you please respond to that?
Is it,
No, you reported to us and I would like you to clarify that.
Yeah, this is incorrect. It says 25% or major plan changes, but if you go to page 7 and 8,
yeah, those are the exact changes, but
that's the changes and that's the contributions that would be necessary to stay with Blue Cross. So I want to go on record that on page 6,
that's an error.
it should say and.
Thank you. Got 2 questions about the TPA. We keep saying we're the insurance company. We all understand that. I know you think we don't, but we really do. But the confusion comes in, we aren't paying the claims. We're giving the money to pay the claims, but the actual process of evaluating the claims and putting it through whatever technology they put it through, and the same thing for prior authorization. That's not done in the Lafayette Parish school system. That is done by either Blue Cross Blue Shield or United or Meritain. Is that correct?
That is not wholly correct. We provide the plan document with all of the specifics to Blue Cross that tells them what to do. So if you are my gardener and I tell you that this is what I want you to do, if I have 3 bids from 3 gardeners, I'm telling them I want you to plant this plant right here, this way, and your job is to do what I have asked you to do. So in the same way, no matter who had that plan document, they are to process those claims in accordance with that plan document. So while you're right, Blue Cross is putting it through their system, they do it based on what we have told them to do.
Correct. But that's why I think there's some confusion in it, is because the actual process of claims payment and the process of prior authorization is not done by LPSS. Writing the check is done by LPSS, and writing the plan on which that is done is LPSS. And
I also want to include that Blue Cross can't amend that plan document. So, the right of legal process, if you will, is that plan document. LPSS could not operate without that plan document.
got it. My question about Meritain and Verity. As I understand it, TPAs are licensed and accredited like insurance companies are. And in what I could find about Verity is that they are not accredited, at least by the 2 companies, the URAC and the National Utilization Review Accreditation. Neither of them accredited Verity. And the other thing, they listed several of their clients in Louisiana, 2 of which were cities. I call those cities HR people. They didn't know who Verity was. They are providers for LSU employees, but they are one of 3 optional networks. Plus, they also get the choice of the state insurance that we don't have.
Verity is an independent preferred provider network. They have other independent preferred provider networks such as multi-plans, PHCS, the list goes on and on. So similarly to LSU, this plan would have 2 networks. It would have the Aetna network as well as the Verity network under the Meritain offering. I hope that clarifies.
Are they accredited?
You know, I need to get back to you on accreditation. I'm not sure that networks need any type of accreditation. I'm sure that they're governed under something, if you will. But when you talk about accredited, I'm not sure what you're referring to as well. What accreditation? And maybe I can clarify that in a statement under Q&A. And maybe what we should have said, I believe that all of the questions today are going to be posted on the intranet site, or no? Okay, I think any previous questions might have been.
We're going to take the most common questions that are asked and provide answers for the general public for both
Okay.
active and retirees.
Can you, just because I'm in the attempt to understand, what accreditation are you referring to?
The two that I looked at were the National Utilization Review Accreditation Commission, or URAC,
I
and
understand.
National Committee for Quality Assurance.
Those are both, as it relates to utilization review and cost management. So in other words, when you pre-cert or somebody follows you as a large case, they're performing those services. Verity will not be providing any of those services. So therefore, they don't need those two accreditations.
So surely they have to be licensed and accredited in some way.
I apologize, I don't know what those license requirements are at the moment, but those accreditations are as it relates to medical management, and they will not be performing that. Meritain will be performing those services that you're referring to.
So Meritain is accredited.
Oh,
Verity,
absolutely.
you're saying does not need to be?
Absolutely.
If I could ask one follow-up question to the other follow-up question. In the past, we've done Blue Cross Blue Shield and Humana. Humana was one of the possible plan providers that you used last year. I believe it was the year before, something like that, if I remember.
Sir, can you check and make sure that microphone's on? I apologize.
Excuse me?
Can you check and make sure that microphone is on?
Oh, it might not be. Let me just try this one.
There you go.
Okay, great. In the past, in a recent past, I believe Humana and Blue Cross were two possible entities that we could use as that you folks use for our insurance and stuff like that. And Humana's off the table now, from my understanding.
No, let me stop you there. That's not correct.
That's not correct?
Correct. Blue Cross is our third-party administrator for the group health insurance coverage.
Sure.
Humana Advantage Group Plan is who processes Advantage plans for folks who have gotten off of our Blue Cross plan, retirees.
Okay. Okay.
So, not apples to apples comparison. And did Humana submit a proposal?
I can answer that question. Humana pulled out of the commercial group market, a year ago. I think there was like 2 years ago they announced it, and then there was a period of time where they, canceled all of those
Sure.
contracts. So
Okay.
they no longer offer employers services, TPA
Okay.
services, or even fully insured quotes for the commercial market.
Okay, well, that answers that part.
Yeah.
What my question actually was going in this, a little different direction. And what I'm looking at is the track record of Aetna and also as United Healthcare, as far as, they come with you. I'm glad to see you look at numbers, paper, instead of people just saying things, which is great. But what is their track record to performance over a number of years? If they become part of this group, this year they say, hey, we could do it cheaper or the same price.
They have a high performance record.
They do?
They do.
And how far back does that go?
It goes back a very, very long time.
Okay, real good. Okay, good. Thank you very much.
I believe it was Mr. LeBlanc that asked how much we were pulling in monthly for or it was Mr. Lemoyne. So in March, we brought in, this is just premiums, Ms. Trish? We brought in $2.7 million in premiums for actives and $1.8 million in premiums from retirees in the month of March.
Yes, hi, Katie Landry, retired educator. And I think, first of all, let me say I appreciate this format where we can ask questions and get answers directly. I think this restores trust, some trust and some transparency, and I really do appreciate that. And I guess a little historical data is that people are here because Blue Cross has been a good TPA for LPSS. And I think most people will agree. Have there been some denials? Yeah. Have there been some delays? Probably, but not nearly what we hear out in the market. So that's a concern, is that the quality of health care that we will get. And I know you've reiterated, and I fully understand this is self-funded. This is our insurance. So I guess my question, and I keep hearing the plan, and that there are no immediate plans to change the plan. Are there any in the near future, I guess, because that's a concern. And I'm going to tell you, a large concern is the amount of denials that may come, because we're at an age now where, you know, things are happening. They didn't when we were younger and we paid premiums, and now it's like our turn. It's like, okay, things are happening that are unexpected. So once a TPA is chosen, are there any plans within the next year to change the administration plan?
No.
Thank
Short
you.
answer is no.
Thank you.
Let me elaborate a little bit. This is what the hope is, and hope is all we have right now, because one thing we don't have is more money.
Okay.
The hope is, and the indications are, because providers have told us they are ready to talk to us. The hope is that if we make a change, that we are going to be able to go out and directly work with the Lords, the Oshners, all of the Park Place, all of them, and work out a better arrangement. I don't want to say a better deal, better arrangement.
I understand what you're saying.
For the same health care. We're not changing the health care. We're going to tell them we want to keep the same. This is our plan. This is what we want to maintain. In fact, over the years, we would like to go ahead and start giving back what we've been taking away. But the only way to do that is to find a more affordable option for it. And so the hope and the indications is that it's going to get better. Do we know that for a fact? Of course not. We do know for a fact if we do nothing, it's going to continue to skyrocket, and it's going to be unaffordable, unsustainable.
Okay.
So the short answer is no.
Okay. And my follow-up question is, so if we switch TPAs, we can expect about the same rate of denial as we've had with Blue. Is that correct? If?
That's absolutely correct.
Okay. And I think that's a concern of everybody, so I just had to ask it.
And I think Tony wanted me to mention that it's not like you start all over. So if somebody has a pre-existing condition, and that pre-existing condition, you've met your pre-existing condition clause, then
It just rolls
there's
over
no
because
less
it's our
coverage.
insurance, right?
Right, there is no less
Okay.
coverage.
And I guess the last one is the appeal process for denials. You know, because I do know someone that was denied within the last couple of years. And I know you appealed to the TPA first.
Mm-hmm.
Since this is self-insured, can we appeal directly to staff for an override because it may be a matter of life and death?
There's a formal appeals process that is governed by the federal government.
Okay.
It's a provision that has to be included in your plan document.
For self-funded?
Mm-hmm, for self-funded plans. And there's an internal process, and then there's an external process.
Okay.
And so what you would do is go through that external process where you have the right to have independent specialists review that on your behalf to reverse that decision.
Okay.
It will work the very same way.
Okay.
And what
are-
I would urge everybody to know is when they get their summary plan descriptions, there's a piece in there that talks about appeal, and everybody should understand that they have the right to appeal a claim that's been denied.
Okay, I appreciate that, thank you. All right, so that was basically, I think, a lot of concern is, insurance companies do save money by denial, and we want to make sure that it's not built into our plan, and I want to clarify that. So thank you for allowing the questions.
Good morning. Are you able to hear me okay? My name is Mike Conant, and I'm asking these questions on behalf of my wife, who is a 30-year Lafayette Public School teacher. In 2003, she was diagnosed with breast cancer, and Blue Cross Blue Shield really stood by her through that period. Took care of the expenses. We're in six-figure numbers. My question to you today has to do with recently my wife became eligible for Medicare benefits along with Blue Cross Blue Shield. Given that, my understanding is that Medicare and Blue Cross would focus on the 80% of the cost of whatever insurance she has, correct? Meaning that 20%, or in this case, with the increase, would be 30% would be essentially our cost. Would a Medigap policy qualify under Blue Cross and Blue Shield and Medicare?
I can take it. Let's see. So basically, your wife is a retiree.
Correct.
And she's covered under Blue Cross and Medicare.
Correct.
It will work the very same way.
Okay.
Now, this question that you have about a Medigap policy.
Right, because there's the 30% that we would incur, that we would have to pay, if I understand it correctly.
Some of the retirees in the back are shaking their head no. You might want to better understand that.
All right.
I think what you're asking is about the coordination of benefits provision.
Correct.
Medicare would pay first, and then the plan, LPS's plan, whether it be Blue Cross, Meritain, or UMR, would pay secondary.
Okay.
And so between those two coverages, you pretty much should not be out of pocket. But I don't want to talk about, providing more insurance coverage to you other than those two plans. I want to just talk about how those two plans work together.
Right.
They will work the very same way if they make a change to Meritain or to UMR.
Okay.
So
Okay.
the way that your claims are being processed today will be processed the same way in January,
Okay.
if
Very
a
good.
change is made.
Okay. Thank you.
I'm Alice Porter, retired speech therapist with the school system, and have been a Blue Cross subscriber for many years. And my question today is about the transparency on the fee structure. Is there a transparency on the fee structure for each of these options that we're looking at? And how does it compare to the Blue Cross Blue Shield?
I think, Kim, the only reason why I'm deferring is I think she's trying to maybe
That's
find
okay.
a slide as it relates to those fees. But the answer is, I can tell you they're very transparent, and Meritain and UMR is going to charge the school district less money to process and manage those claims.
Yeah, so I'm happy to read out the annual administrative costs, and maybe I can zoom in a little bit. There's a lot of components that make up the fee. Sorry. Okay, so currently today, LPSS pays Louisiana Blue $3,022,800 to administer, and I'm sorry, maybe I misspoke, that is what they would be paying them come 1/1/26. Under the, I lost my titles, UMR. Under the UMR arrangement, they would be paying UMR $2,667,600. And under the Meritain offer, they would be paying them, and this is just administrative services only, $2,631,408.
Is the fee that they, that it's due, is it on a contractual basis yearly? Did they come back and, did they come back and negotiate at the end of each year, or how is that set?
So no, the proposals that we received are 3-year proposals. So we request that we get a 3-year rate that they lock into. There are other termination provisions that would allow LPSS to get out of that arrangement, but we lock into the rates for 3 years.
And going
Thank
down
you.
further, you have the credits. Do we have any other questions? Am I allowed to ask? Yes, ma'am, if you come back to the microphone.
Hello? My name is Deborah Thrower. I'm a retiree rehire because I'm still subbing, and I have a question. My husband, who's under my insurance, just made 65, and we have a great Humana PPO Advantage program, because the first thing I said, oh, everybody says don't do Advantage. So I had several people look over it. It's a great program. I mean, he's starting like this month, so we're going to wait and see the 6-month thing and see if it's as great as it's supposed to be for a very reasonable price. But I heard y'all say something about Humana, and I'm like, are we still going to have that available for the retirees? I'm not old enough. I can't get it yet. I'm still paying the other stuff. And then I also heard Social Security, and this hasn't been determined, that they're questioning whether they're going to allow for Medicare having an Advantage plan available for people who are eligible, you know, who are over 65. Would that affect us having a Humana, if they somehow got rid of that, the government didn't allow that anymore, would that affect us being able to have a Humana plan under our system?
Yeah, I'm not aware of any changes that the government is proposing regarding Medicare Advantage plans. You currently, LPSS offers the Humana Medicare Advantage plan, to your point, at a very affordable price with great coverage, and that plan is not being removed at this point.
Okay. So I will say it is an amazing plan. I even asked somebody who sells Humana, and she's like, I've never seen a plan like this. You need to get on it. Your husband needs to get on it. And for the price they were asking, you still have to pay your Medicare amount, your $185. That doesn't matter what you do. You still have to pay that. But the amount it costs and what they cover, the only issue you have is you have their physicians, and if you don't pick their physicians, you may be moving a doctor. Like I know when I do it, I'll have to move at least 2 doctors, but personally I really don't care because I don't care for those doctors. I just had to take them when I needed a doctor, and they were the ones taking, so I'll make sure in the next 2 years I'll find a doctor I like. But I just wanted to make sure we're still trying to keep that Humana program. And I've also talked to several retirees who are still on Blue Cross and Blue Shield and saying, man, it costs so much. And I was like, I might be talking ahead because I haven't used it yet. They're like, we're too afraid to go onto that Humana plan because it's not going to pay for everything. I said, well, according to this booklet, it's a pretty good plan. You might want to think about it, but there's still a lot of people out there that want to, even though they really can't even afford the Blue Cross and Blue Shield anymore, that they're afraid to look into that plan. So I'm hoping some people are going to look into it, but I'm glad to hear that it looks likely that we're going to continue having that. Thank you. That's the only question.
Just real quick, and I apologize, I'm getting older and, I forget. And I didn't write it down, and it popped up. When you talked about the 3-year lock-in rate for the TPA, and I certainly understand that, and that there's some opt-outs, it's a 1-year contract and an opt-out. Does that mean it's an automatic renewal for 3 years unless the board opts out? Or, our concern is it's a new, if you adopt a new TPA, if there's some problems out there, we would like the board to hear it in this fashion so that we can express our views. So I know in the past with Blue, there have been some automatic, no complaints, we automatically renew. So is that in this contract?
Well, we don't have a contract yet, but I will say, Ms. Landry, that our goal is no matter what, is to go back out to market every 3 years on this service. It's just like when you shop your car insurance or your homeowners, maybe every year you do, but we at the minimum every 3 years. But if we see hiccups that are not fixable, then yeah, we want to be able to get out. Our goal here was when we went out to market, which as the superintendent said, we hadn't done in a long time, was to, the ideal thing would have been not to make any changes and still be able to get the same level of commitment from a TPA that we're looking for. We want to drive the boat. This is our health insurance plan. We don't want an insurance company dictating what we do with our plan, which is what's been happening. To Ms. Thrower's point, right now we still offer the Humana plan. Foreseeable future, that doesn't appear to change, but we did try to bring in a Blue Cross plan last year, try to negotiate with Blue Cross. They didn't want to share the market, so they're not in. But things can absolutely change year to year. Same thing with this particular side of the house. It could change. But the idea is to go out to market every 3 years, the same process. Here's our claims, reprice them. What would it have looked like? If this works out the way that we're needing it to, the repricing every 3 years is going to be just like that, because we're going to have the direct relationships with the providers in this community. And that's what we're looking for. We still need a partner for the folks who don't live in Lafayette, and that's why we're partnering. Yeah. We want to partner with a large firm like a Blue Cross or a United or an Aetna.
Yeah, okay. So this board would be open to, if there are some complaints, having this type of meeting so that we can adjust. Okay. And if I'm not mistaken, I think Humana in this year's budget, I think the contributions to Humana have gone up a little over $1 million. So it's coming up too. I think I saw that in the budget. Is that correct, Mr. Duca?
Yeah, the enrollment went up quite a bit this year.
Yeah, it's based on the enrollment.
Okay, because I did notice it was an increase in the budget.
Yes, it was because the enrollment increased, I think, like by 400
But their
people or
premiums have
something.
not.
So
I mean,
we
we're having to
put more
pay.
money into it.
Okay.
It saves us on the back end through the claims and prescription.
Sounds
Yes,
good.
ma'am.
Okay, thank you.
One other thing, Ms. Kate, is that we're going to continue to have the board insurance committee meetings. We're going to still have the advisor meetings. Those are going to be 2 avenues that we're not stopping. We're going to continue looking at this year in and year out. And every quarter, as far as the advisories, everyone is invited. You come to those, and basically we can voice those concerns that you have at that time, okay?
We just want to make sure we're covering our bases. I mean, if we take this leap of faith, which it kind of is since we've been with Blue for so long, we just want to make sure there's some safeguards in there. Thank you.
But please also remember, don't wait for a workshop to be scheduled or an insurance committee meeting just so that it can be said on record. We'll say anything you guys want to say on record. If there's a concern get with us immediately. If it's a healthcare concern, don't get with me. There's HIPAA law. You get with Trish. But if you still have a concern at that level, get with us. Let's not wait for a committee meeting. Let's tack this as soon as we can.
I agree, totally, thank you.
Hi, I'm Bonnie Smith, and I just had a practical question, I guess, for me. Is in the presentation, I saw the premiums for Blue Cross Blue Shield with the 25% increase, but nowhere on there did I see the premiums for Aetna or United. Is that available to us, or is?
It's because there's none.
But there's no premium?
They'll stay the same, no increases, no changes.
Okay, so we're just gonna, okay.
Because of the savings that LPSS can reap by
Right.
moving to these other companies, it's not necessary for a premium increase on 1/1/2026. If you stay status
Okay.
quo,
No, I know it said there was no increase, but I just didn't, it was never outlined like it was on the Blue Cross, and I just didn't know if there was if that was anywhere in the presentation.
No,
Okay.
ma'am, we didn't do the sheet because since there was no disruption on the plans or premium increases.
Okay, thank you.
Okay. Yes, ma'am.
Okay, I've already introduced myself. I just have one question. You said that y'all gave all of the information on the claims to Gallagher, and they looked up everything. But the only information you give is that I had a shoulder surgery, I had hip surgery, I had brain surgery, or something like that. Not specific doctors or anything like that. It's just general, right?
so the file that was used, and Kim might want to specifically, speak to this. You want to go ahead, Kim?
Yeah, I can. So the information that we retrieved from Blue Cross, because they have all of the data, we asked for a specific file. That file has no PHI information, so I have no employee names. I don't know who the actual claimant was, right? But it is a line item file. It is every claim during a certain time period, and there's a lot of codes, right? So claims have CPT codes, identifiers with those codes. It also has provider information. So we do know that, this shoulder surgery was performed at Dr. Jones, and the billed amount for that surgery, right?
Okay, so
So we give that information to the bidders, and they tell us at that provider for that service, here's what would be the allowed amount for that particular claim.
Okay, so if you use that information and they say, okay, Aetna, let's say, says, okay, we're going to only allow this, but that provider and that place that you have the surgery or whatever says, nope, we're not going to accept that. What happens then?
So they're under contract to accept that. So if they're a part of that provider's network, then they've already contractually agreed to accept that dollar amount.
But how do we know that they're going to be part of the network that we want?
So all of the claims, I guess the second part of, our evaluation. So the first part was a repricing of the claims. And then the second part is identifying providers who are in the network versus providers who are out of network. If they are in the network, then again, they've already contractually agreed to that price.
Okay, so you're saying any doctor that we've gone to in the whole last year, everybody in Lafayette Parish School Board has their particular claims for that particular doctor and that particular facility have been included in what you're asking for United or Aetna or whichever one we're going to those costs are included in their claim that they're going to only charge us that much less. Well,
Yes.
okay, yeah, because, so it costs Blue Cross, they're saying it's going to cost $3 million plus an increase, but these people are going to have the same type of claim with no increase and only having to pay $2.6 million basically for both of them. That's what you're saying, that the
That's
provider and the doctor are included in that.
In network, let me clarify
In
that.
net-
There are going to be some providers, doctors, processes, which if you look today, which we have access to through clickable links, one-sheeters, there are going to be some providers who are not in, let's say, United's network, that are in Blue Cross's. There are going to be some providers that are not in Aetna's network and Verity's network that are in Blue Cross's.
Well, the reason I'm asking.
And by the way, there are going to be some providers that are in United and Verity
That are
and
not.
Aetna's that are not in Blue Cross's. So what we're going to work to do, and what our goal is, to make sure we identify those providers, as many of them as we can, and if we get 100%, that is our goal, to understand that they need to be in our network. If your provider doesn't want to be in our network, you should ask them why. I encourage you to ask them why.
Oh, I would.
And don't accept because it's a lower payout. Further ask them, do you get overrides from Blue Cross? What other payouts do you get for that arrangement? It is going to be advantageous for each one of these providers to be in this network. And if they don't want to be, please don't hold this plan document accountable for providers who love the $50,000 fee on a knee replacement when everybody else is doing it for 30, right? Don't hold this plan accountable for that. Just because you like that particular person, hold them accountable to make sure they come onto this network and continue to get y'all's business. But there are going to be, I assure you, there are going to be a significant amount, the disruption that you see, that is going to dwindle. We hope by 100%. That is our goal.
Well, since most of our doctors, you'll see when you get older, they make you go every year or every 4 months or 3 months. Most of them, the claims that you had last year were probably the doctors that should have been forwarded, the costs should have been forwarded when you were making these proposals. So we can assuming that most of us who have been to a doctor in the last year, that they are in the plan. Now, the facilities may be something else. Okay, all right, thank you.
I'm sorry, but real quick, and I wasn't going to bring this up. I just had 2 major surgeries in the last 6 weeks. In-network providers with Blue. But I don't know if you're aware, but when we go to many doctors now, they make you sign a paper that if your provider does not pay the whole cost, you are responsible for the difference. And that did happen. I mean, I had to pay maximum out of pocket. And then my surgeon, Blue Cross did not cover, even though he's in the network, did not cover his total cost. So I was responsible for an additional cost. Are y'all aware that's going on? And since they're in network, is that legal?
Yeah, Melody's gonna answer that, but I'm hopeful again that we don't hold us accountable when sometimes the providers need to be held accountable.
Well, I understand that, but I mean, I was a bit shocked, and I remember signing the paper thinking Blue Cross is always paid, and then I get an extra bill.
So, a couple of things here. When you go to the doctor or you go to a provider, they have what's called fax recall. So that night, they get an update on you, on how much money you've satisfied towards the deductible and out of the pocket. So when those clerks, are checking you in, they should know how much more of the deductible or coinsurance needs to be satisfied, and they should only collect that amount. If any network is collecting more than what they're supposed to, you need to report that to administration.
Okay.
That is part of the contracts that they have with the networks is to, not charge you more than that allowable amount. And they make mistakes, so I urge you, and it's very difficult to look at those explanation of benefits. But they should never be collecting more than what you have not satisfied.
Okay, good, because I haven't paid for
Additionally,
the
I thought this
second one
might be a
yet.
good time to point out as well. If a change is made on January 1, and everybody's going to get many a notice to make them understand when they get an ID card and how to file a claim and what the customer service numbers are and all that. But do know that any claims that were incurred prior to January 1 will continue to be processed by Blue Cross. And that's important because they're aware of how much went towards your deductible and coinsurance already. January 1, all that starts all over, so it should be clean, if you will, for the new administrator to try to sort through, how much deductible and coinsurance you have, because it'll be the entire amount, because it all resets January 1 anyway.
So that shouldn't have happened, because I did pay maximum.
It's what it sounds like.
Thank you.
But I don't want to comment.
And
either
I'm
unless
not holding our insurance responsible. I mean, it's obviously with the provider, so I need to take it up with him. And I found it unusual. It's the first time it's happened to me, and I haven't gotten his bill for the second one yet, so at least I can stand my ground on that one. Thank you.
And I just want to reiterate, it happened to my husband recently. And so I'm standing there and I see it happening as they're checking him in. There's not much you can do with the clerk because those ladies don't understand. But you certainly should keep copies of all of that so that you can make sure that your claims are getting processed correctly and the provider's getting paid the right amount.
Thank you.
Just one last question, and this is basically, I went over the administrative costs that you talked about, and in very rough numbers, you're looking about saving about $400,000. You plan using the other two over Blue Cross, and you do that over a year. That's still under $5 million. It's like a little about $4.8 million. You still got about $1 million deficit. My question is, how sensitive are you as far as $1 million is a lot of money, and as far as the deficit, how sensitive are you? What is the real red zone as far as dealing with the deficit, as far as dealing with the medical payments?
So the administrative fees you see are not inclusive of what's the term? Forget about claims. We'll get to that in a second. That's the most important component, but the credits. So the administrative fees you see are just the baseline, but there are two bidders, if you will, who have offered back credits to the tune of.
In year 1, UMR, let's just say that the annual savings from Blue Cross is $1.2 million. And then Meritain, the annual savings is $594,000.
Yeah.
So with some additional credits, those, the savings are a little bit higher than just the ASO fee.
Yeah, so you have that component, which is important, but the most important component are the claims. And that's where we're looking to make the major difference in the savings, because I'm going to throw this number out, and some folks are going to question it, but there's nothing to question. It is on the spreadsheet. It is there, and it is reality. It is what has happened. Had we not pumped money into the general fund the way we did, we keep saying we had a $7 million, and $8 million, $11 million deficit. Ladies and gentlemen, with the reality and with the projection for the rest of this year, $17 million. Now, Point Solutions came back with approximately $5 million worth of savings.
Yeah.
We've got more Point Solutions that we're going to be implementing. And we didn't even touch pharmacy yet, which we believe is going to be a significant amount of savings. So we are inching away before we even touch a new TPA but we're still not there. And claims cost is going to be where that opportunity is.
Yeah, it's a tough problem. It's a real tough. It's a much older population, and everybody obviously has some problems, you know. So, yeah, thank you very much.
Let me just add this for the record, is that we're trying to not do it in one place. We're trying to find different places within the health insurance market so that we can find cost savings. But more importantly, Mr. Hidalgo and everyone has stated, is that we need to do this and keep the market up to date and understanding that we're going to go out for market, and we're not going to stay in a relationship with someone for 31 years and determine that, oh, we're just going to do what we're doing. We need to keep everybody open to that. This is a business that you need to make sure that you're competing for.
So in the fall, when we do open enrollment, and we would sign up for whichever United or Meritain, what you're saying is by January, you plan to add additional people to the network?
No, ma'am. So right now in open enrollment, whichever TPA, you'll still stay with the Lafayette Parish School System Insurance, but it will be with a different TPA. It won't be a choice. So when it's voted on for the new TPA, that's just the insurance company you're going to go with. You will still be able to choose, for some people who are eligible, the Humana option or whatever insurance TPA. You're really just staying with the Lafayette Parish School System. We're just changing the TPA. Does that answer it?
No, that's not my question.
Is that not the question?
Jeremy?
That is the ultimate goal, Ms. Mounds,
Okay,
is to make sure that any doctor, facility of any kind that is currently in the network, that one of our 10,000 insureds are utilizing, be in this new network. We are going to start off by using two, if we use United Health, they already have a very, very small disruption rate, but there are still going to be providers who will not be included. If we utilize Meritain, we would be utilizing two networks, not one. The reason is Aetna is much larger and has a footprint nationwide. Verity is very localized and has a lot more relationships locally. But that doesn't stop there. We would continue to call on, A, current providers to try to work out better negotiations internally, and B, make sure that we're reaching out to those providers who are not in either one of those two or that one network to come into the network. One example is Acadian Ambulance. It's public, so I'm not, is not in either one of the networks of the other two or three networks. That will change.
So is this someone in LPSS is going to be finding those doctors that aren't currently in the network and approaching them?
It's going to be a humongous team effort. It's going to be between LPSS. It's going to be between Gallagher's Help. It's going to be between whatever TPA we have chosen.
We'll get that from data from the TPA. Just like we showed the disruption analysis, LPSS has access to where care is being performed, and we'll be able to see the in-network and out-of-network charges as they progress.
All right, I want to thank y'all so much for today. I believe this was productive. I'm hoping that everyone walks away with the same sentiment. I do want, before we leave, want to give an opportunity for board members, closing comments, Gallagher, superintendent, anyone to have closing comments. Trish, anyone?
I'll kick it off.
Yeah.
So I just want to say, earlier in the conversation, there was a talk about finances in general, right? I just want to be clear. So besides our own finance department reviewing the insurance numbers, my predecessor sat in the seat and the other board pushed for LafayetteCheckbook.com. You go LafayetteCheckbook.com, on the left column, because I just checked it, you'll see Fund 85, both expenditures and revenues. You can go in there almost item by item, not saying you'll see such and such procedure, but you'll see all the transactions that go on inside that fund, so some clarity there. We also have a third-party auditor that comes in once a year, who we may not always agree with, but still audits the funds and finds any, sends that to the state legislative auditor every year. I will add, last year, a year and 3 months ago, the board received a letter from that auditor talking about the insurance fund and how if we don't correct some financial issues inside the insurance fund, it will become insolvent, which means no more LPSS insurance. And we have to be cognizant of that. Like, yes, there are some challenges. And in this potential plans, whatever way we go with, the idea being that in 2.5 years from now, I may or may not be on the school board again, right? Depending on how I feel if I rerun for election, et cetera. I want to set a plan in place to make sure the next school board doesn't have to handle these financial issues, right? And we come to this every year, and we have to have an argument around what's going to be the changes, the premium increases, et cetera. Because while we're talking about a 25% increase this year, next year might be a whatever, depending on how medical costs. Because we all know medical costs aren't going down. The trend is not to go down nationwide. So I just want to put that in perspective. It's not about just getting it through the next year. It's about putting a plan in place to make sure the next school board or the future school board does not have to deal with big issues, right? We just want to tackle small issues on a month-to-month basis.
And for me, so I'm not technically on the committee, so a lot of this is kind of great information, like you said. The only thing I've had, some constituents reached out the last couple of days was clarity. So everything that seems like you're doing, you're trying to make it clarity, but like whoever we're using, there's always a generic answer according to them, and it's always, well, we cover that, or we might cover that, but there's nothing specific. So just the more detail we can show them, it makes my life easier, but it makes the constituents feel a little bit better that they know that the answer is coming from the right people, right? So it's not like me saying, yeah, I think it covers that. It's actually the people that know what they're doing that's answering the question. So the more we can do that, the better. I mean, I think we've come a long ways from the last time since I've been here.
So I'll just say that, number one, thanks to each and every one of you for coming. I want you to know that this is something that needs to happen. It's something that we're going to never, ever take our eyes off, that this is a retiree along with an active plan, and we need to take every one of you guys in consideration with that. And I give you my word that the decisions being made, we're going to do that, and we're going to put it in front of the board, and we're going to give them what they need to as far as making decisions on behalf of each and every one of you. So thank you so much for coming. I want to thank Mr. Hidalgo for, first of all, suggesting and allowing this process to take place. This, I think, is the right step. This is where we need to be. This is exactly what needs to happen, regardless of where we go as far as the TPA is concerned. I'm going to reiterate something that Mr. Hidalgo also stated. Bring it to our attention. Don't let this fester. Don't let this be something that just continues to be building over and over again. And we need each and every one of you, because this is your plan. This is your plan. And again, we need to all work together as we are approaching, again, 31 years that we're making some changes. I understand how uneasy some of you are. I completely understand. When you have been with someone for that long, but listen, we're doing a lot of different things in Lafayette Parish, that we're trying to change the narrative, and we're trying to make sure that we're looking at what can we do to make things better. And I hear it. Yes, we're making facilities better. It needs to be. We need to do all these different things, and I'm just glad that you guys are noticing, but I'll go back to, this is your plan. I understand what's at stake, and we're going to do everything we can to make sure that the active and the retiree plan is what it is. Thank you all so much.
All right, thank you all for attending the workshop. Until next time.